This conference will now be recorded.
Hi everyone, it's Patrick Reed from the Adams Principle. It's the 6th of January, not the 6th of December, which I originally put on my note, but I've got the correct month. It is January, and I always say this every week. It's been the most craziest week ever. Beat, you can back me up on this, can't you?
Yeah. To be honest, in the beginning I thought, oh, it's going to be a short week, just 3 days. But on Friday night, I said to my wife, it felt like 2 weeks. It suddenly felt like a very long week. Crazy.
Absolutely crazy. And I've got some great news. I'm not going to steal your thunder, Beat, because I'm going to let you tell everyone this amazing news. Is a result of circumstances on Friday with our very own trolls. Thank you very much.
Yeah.
That means we've arrived. We're famous. We've got our own trolls. Amazing, amazing. So Beat, without further ado, would you like to tell everyone about this amazing new news?
Yes. So I created a group called FX Macro Views and sort of published it, and everyone can sort of send a sign up request. And the idea really is there's really just three rules. Rule number one is no trolls. Rule number two is no foul language. And number three is it shouldn't be a selling platform for people to sign up for their signal service, whatever. So the only thing it should be here for is for everyone to chip in, sharing ideas, sharing feelings, sharing, whatever they think about the market. And hopefully for 2019, we're going to get a good group together. Actually, the count is already in no time, we're up to 75 members already.
Wow.
Just the day. And it'd be nice just to get a group together that really the core interest should be talking about FX, talking about the business we love, sharing ideas, and hopefully help each other to be more successful, and that's the idea. And everyone is more than welcome just to chip in whatever they feel, just get good, honest discussions going without all the, aggravation of, everyone has a voice and we can discuss. I would love to have a great group together during the year.
That's fantastic, Pete. And I'm really excited about it. A couple of things I think I wrote on my comments. And if you are an experienced guy, we both leave comments on some experienced guys on the sell side and buy side. You yourself, Pete, have had vast amounts of experience on both sell and buy side. I'm a prop guy, so I was just in that space, i.e. buy side. But if you do have a lot of experience and you do want to make comments, just leave your ego at the door. I take my work very seriously. I don't take myself very seriously. The only thing I will mention is also the flip side of that. If you don't have any experience and you want to join, and just ask questions, I'm always asking questions. I'm always trying to play Sherlock Holmes, and Beat does too. It doesn't matter how much experience you've got. Markets change. Markets throw things at you. And only last week, right, with the flash crash, things happen, and I don't know. Beat doesn't know all the answers. We've been in the game quite a long time. Beat much longer than myself, and it's okay not to know everything. Don't feel you have to know everything. This is really directed to the new guys and the retail guys. So just everyone's welcome. Just like Beat said, it's just a place, a safe place that people can express their views and hopefully we can all learn from it. So absolutely. So the first topic tonight, I just want to put on dollar yen's up, and I'm going to probably toggle around with euro yen and Aussie yen here in my chart. But let's leave dollar yen up. Flash crash, right? So LinkedIn was absolutely hilarious. Let me just get this up again so I can see myself. Right, LinkedIn was hilarious because all the experts came out and all the experts were telling everyone what actually happened, why it happens, and who was to blame, and all the rest of it. Well, it doesn't really matter. B, you know exactly what happened. So I'd like you to, in your words, just explain to people who didn't see all the explanations from all the experts, in your own words, what actually happened.
To be honest, I think there's a few things. I mean, one thing, not that I sort of saw it coming, but already during the day, I've noticed very fast price action. You know, for the euro, the way the euro dollar started to come off in the afternoon, for the pair like euro dollar, it's very unusual to jump, you know, to gap 20 points lower. Dollar yen was already all over the place. You know, it went like down to 108.80 given, came back 10 bid. Euro yen was the same. So already, I said to a friend on that day, I said, you know, it moves a lot more volatile than at any given time between Christmas and New Year. So reality is, I think, problem number one, bank liquidities must have been in the toys, in the e-toys, must have been on holiday setting, what they usually do. What they do is on holidays, which is 2nd of January, a lot of Europeans were still out, so it was still an official holiday in many countries. So what they do is they drive liquidity down. So they have more casual settings for liquidity, usually a little bit of wider pricing, just to sort of protect them from abuse, which kind of makes sense in a way. And when I was in banking, you know, you always had those people who try to use these kind of days to play games, so you drive down liquidity. Then the other thing is, it's a perfect storm. You know, it's really, the Apple news came out, the reference to China was probably what caused the people really to you know, look twice. I don't think it's just the earning. The earning itself, yeah, you would have seen Dow come off a bit, but it wouldn't have probably created that sort of panic. And then the reference to China, someone must have just panicked. It's the typical handover time when risk goes from New York to Asia. I'm not saying everyone was sleeping at the wheel, but maybe a little bit. Then don't forget, some machines switch off at certain time, you know, 10 o'clock when the date switches. So usually flash crashes happen at this time of day. It's really just the thinnest period. There's a lot of conspiracies about someone wanted to create that move. That's all rubbish. It's really an unfortunate event where, you know, all the tools are, you know, of low liquidity. You get the news, you get probably a lot of stops on the way down. So that should not be. So the only thing we can take serious from the move is it was the weak side, is where the wrong positions were from the carry. And probably the yen crosses have come off a lot between Christmas and New Year, when you remember, and we probably got closer to the first real cluster of bigger stops. And then you and I know, once the algo takes over, the algo doesn't sink, the algo doesn't suddenly feel like, oh, that's a bit low to sell. The algo just clears the risk. The algo or the bank algos, they don't have risk setting. That means as long as the bank or the machine has risk, it's clearing the risk. That's just what it's doing until it has no risk, or unless suddenly some buyers come finally into the market and the system starts to shift the other way. So it's just unfortunate. I still think, you know, my view would be that maybe banks should be more responsible in terms of, if they want to have the shop open, have it really open. If you don't want to have it open, close. Maybe the market should therefore be closed on the 2nd of January. I don't know, you know. So that's really, I think, there's nothing sinister about it. It's an accident that will probably happen more often, because that's just the nature of the game, that we have less risk takers out there that benefit from silly levels. You know, like I think I wrote about it on or blogged about it as well, that, you know, in the old days that never happened, because as a trader there's a certain level where I go like, you know what, I'm not going to sell $1 down here. If I wait an hour or two, it's going to bounce. And that's why we never had a flash crash in the voice days, because no one would just keep selling. You know, every trader at some point would say, well, you know what, $104 yen was just 109. That's silly. And that usually would stabilize the market, which we don't have in the algorithm. But we just have to forget what happened. Doesn't mean like it happens again next week. It won't happen for a while. So we should just forget about it.
Mm. Interesting, and thanks very much for your insights, Beat. My take was absolutely spot on with yours in that it was the Apple mentioning of China, and when you talk in China terms, Apple downgrading one thing. When they stick China in there, it's a global growth issue.
Yeah.
And I also, off the back of the China PMIs sub 50, hasn't been like that for a very, very long time. Whether you believe PMIs in China or not, after HSBC stopped doing it, it is the common metric. It is PMIs. It's sub 50. It's contracting, not expanding, and all of that together with the liquidity just
just
the vulnerability.
Yeah, perfect storm, really.
Perfect storm. I think the things that I took out from all of that is we've been risk bears for a long time, for at least a couple of months or whatever, at least a month. If vol is, I haven't seen VIX at the moment, but if vol is increasing, which it is because of QT, and all the rest of it, and rate hikes and FCI slightly upticking and all that stuff, if vol is getting on the increase, which it kind of is, and especially after February where the vol complex blew out, then what are you doing putting in big bids on dollar yen? Doesn't matter if it's 2 or 3 big figures away from your level. If you're selling into, if you're sort of a cyclical or structural risk bear, you've got to really be asking yourself who's got big bids down there. And if the tide goes out and it's really thin liquidity, the risks are to the downside.
Yeah, to be honest, I think you nailed the head on the head, and this is what I sort of discussed with my students as well, is the reason why, to be honest, hopefully touch wood, I never get caught, but the reason why I usually don't get caught in these things, or sometimes like last time I benefit from it, is because I'm very strict on how I take risk, like the stuff we discussed. We risk bears, so there's just no point. I know people that bought the dip at 108.50 thinking like, oh no, that looks really low now, probably should bounce 50 points, and it drops 4 big figures. There's just no point. Yes, sometimes, yeah, of course it works. You do a bit of a counter trade, but I have given up counter trading years and years and years ago, exactly for that reason. I'd be short risk or flat. That means a flash crash, which I'm not saying is going to happen that quickly again, but it only happens into these sort of moves. There was no risk that night that the flash crash is going to go the other side.
Exactly.
So means like if you have a view, the last thing you want to do is be caught. You bearish and you're long and you get nuked. That's about the most painful thing to experience. And that happened to me maybe 15, 20 years ago, and I stopped doing that exactly then. You bearish and you long and you lose money. There's nothing worse than that. So don't do it. That's the conclusion I would draw from the flash crash for many people. Stick to your guns. Stick to your views. Don't be cute.
Exactly. There's no winners for being cute. So the other thing is this whole thing about Mrs. Watanabe carry traders getting caught short. Just don't be one of those people. I mean, it's a type of trader. I say picking up nickels under a steamroller, and I used to do it. I used to scalp in futures, so it's all fine. It's all great when nothing happens because you're picking up bits and bobs. You're picking up that carry, but just be careful, And many people got turned over on the flash crash. I think that just as I won't sort of bang on too much about it, but just as a kind of warning, I'm not going to say it's going to happen again, but this The perfect storm exposed vulnerabilities, and it's a sign of where the market could be going, and it's in line with our view, i.e. risk bears. That's just my take, and I might be wrong, but there you go. So the next subject is Brexit. This is I almost forgot we're leaving Europe. Beat?
Yeah, yeah.
What
Well,
happened?
yeah, to be honest, I think when you remember, we talked about this in December, that we have this 3-week honeymoon without any Brexit news, and where we actually thought the dollar could actually weaken and the euro might actually end the year at 115, 116 or higher, but it didn't really use the window. And now come Monday, we're going to have Brexit on the front page again. There were a few tweets over the weekend from Peston. Robert
Yeah,
Peston.
you sent that. That was really good. What do you reckon?
So he, to be honest, obviously all these, whether it's Peston or it's Kuhnsberg, all these people are very well connected, and
Yeah.
obviously have MPs that speak to them in private. So by the looks of it, Christmas has not led to the 100 MPs that voted against Theresa May in the no confidence vote to actually change their view much about that they don't like Theresa Steele. So she's playing time. She's more or less putting the knife on people's throat by having the vote next week, just days away from her own deadline on the 21st of May, 21st of Jan. By the looks of it, it's not going to go through. And as
Yeah.
she said, astonishingly today, she herself said we will be in uncharted territory. It's very, very encouraging to hear your own prime minister say that. So I think, I don't know, and I think like the discussions we had many times, we're back to a 50-50 risk. We're back to being unable to call it. For me, it's hands off again in sterling the next few weeks. When it comes to euro, we have to expect pressure to return on the euro. That's why I didn't mind that euro sort of gone up with that JP stuff from Friday, which we're going to talk about later.
Yeah.
In the hope that we go have a quick 114.50, 114.70 to maybe actually sell the euro, because I think the pressure, again, we don't know what the vote is going to be, but the nerves and the feedback we get from Downing Street and from Parliament is it still looks like a no. What they do then is like all these options we talked about. Is like some people say, oh, if Parliament votes no, then there's a chance of no Brexit. Then they said the Parliament will not accept a no-deal Brexit. But there's a big legal question whether Parliament actually will be able to have a say. Reality is, and that's what is the scenario all along, is when we have a no vote, by default, at this point, whether we have it a few weeks later or not, I don't know. At this point, we have a no-deal Brexit by default. That's what it means if Parliament votes against the bill from Theresa May, because that's the only thing the EU had to offer. So if we have a no vote, by default, that means no deal Brexit. Whether then they turn around and Parliament wants to take charge of the negotiation, push back Article 50, that's, in my opinion, the only way out. Not to revoke Article 50, but shift it 6 months. Crap for business. Maybe sterling will probably rally because it may hope that that means, you know, the chance of a deal to go through is more likely. There's some discussion going on the EU side that they wait for the vote to happen, and then if it's a no, then they're going to offer some olive branch to Theresa, and she can have a second vote. So I just don't know, to be honest. Reality is, the facts are, if Parliament votes no, it's no deal Brexit until something changes, which means euro is going to be under pressure. The usual suspects, euro yen, euro Swiss, sterling. You just can't be long. You know, whether, you know, it's going to be a no, or whether whatever comes after, we just simply don't know. But what you can't do is you cannot be long anything that has a Brexit risk involved, at least not until after the vote. You know, there's no point. I mean, you won't see me long. even if I have my doubts around the dollar, you will not see me long euro dollar. That's why we came up with the idea in December to sell dollar yen. That's the only dollar, and that's still my view. Dollar yen is the only dollar that you can sell without having to think too hard, because most stories go your way. Long euro, problem, Brexit. Right? Long sterling, we don't even need to mention. Long Aussie, you have a bit of a China issue, and so on and so forth. So no, you will not see me. And last but not least, euro dollar, like we always say, 60% of the XY. If your dollar goes down, all those people that just watch the dollar, not like the rest of the stories, there's plenty of people just watching the dollar. If you see that the euro dollar go down, means that the XY goes up, so people feel the dollar goes up. So another problem there, right? So I don't know, my dear. I wish I would know, but it's fact is we have to risk manage. We have to think about risk reward, and that means you can't be long euro, you can't be long sterling the next 2 weeks. Right? You just can't.
So, like when there's a no, bit cheeky, but when there's a no, what are you going to do? You're going to sell cable?
No, sell euro.
Sell euro, yeah.
Euro,
you probably get on it.
To be honest, it's sterling will be moving so fast. It'd be difficult to sell it, right? So I won't even go anywhere near sterling, because you will have a bigger gap in sterling than you have in euro. It's not going to be easy to sell euro either.
No.
But I think it's easier than to sell sterling, right? But then you have to. What I usually do is let's just say euro would be 113.80 when that comes out. I usually always set myself a level where I say I accept a certain gap, but not beyond. So that means I just try to protect myself not to be that lumpty who sells the low. You sell a 112.80 gap and it comes 13.5 bits. It's not really funny. So I usually set myself entry targets on the worst case, that when the gap is too big, you just have to pass and go, okay, missed it. It's better usually than just chase it.
Yeah, exactly. The only thing on my take of that is, if there's a no and they kick the can on the date for it to go through, I think John Major made some comment on, let's get a proper deal together and have it later on. I was actually having this conversation with the guy of ITC. It's a Squawk service, and he was saying you want to be selling cable. I was like, mate, I want to be buying cable if they kick the can on the date, because that's a bit of like relief. So
to be honest, the only problem we will have is, because politics is so bloody slow, is hopefully we will get a better understanding of the roadmap before we actually have the meaningful vote, so that we actually know what happens afterward. I think I dig it out. I think I had some diagram again on how long the prime minister has. I think it's 21 days or something. So we will not know unless they tell us next week. We will not know what happens next, other than that from all these special pre-votes they had at Parliament at some point. But I think she has 21 days before then Parliament would take over.
Okay.
Don't forget, 29th of March. It's coming quick.
Yeah, I know.
Reality, what I agree with you is a no vote, sterling down, euro down, and then, then we just have to see where the time. I think the second referendum looks to me like completely out of question. Even the Remainers, I think, realize that that's the worst idea. I mean, you just turn politics into a farce if that happens. And then the Brexiteers already say, okay, if Remainers win, then we make a best of three. So that's why you have to avoid a second referendum at all costs. I think there has to be another solution.
Well, if you asked me this 2 years ago, what would be happening, I would have laughed. I would have said, they'll sort something out, surely. No. just
To be honest, this is the mistake I made with Brexit. I'll be honest, I didn't call Brexit. I was in this M25 bubble. My wife actually warned me that she said, you know, a lot of people she's talking to gonna vote leave. And I was in this. I never even. Usually, as you know me, I'm thinking outside the box a lot. That was the first time when I just went blindly into it and didn't even consider a chance that it could be leave. And you know, I learned my lesson. I'm same as you. Common sense would say there are 2 years to make sure this project doesn't crash. But the irony is when you look at the incompetence of Parliament and this sort of, you know, infighting rather than thinking about the best of what's the best actually for Britain, it's embarrassing. And it could just, you know, as I said, we could actually just stumble into a no deal, even though we never wanted one. But technically, we have a no deal Brexit the moment the Parliament says no.
Yeah.
It's still reversible, but at that point, that's what we have, a no deal Brexit. That's the technical or the legal term at that moment.
Fantastic, Beat. Well, that's. I think we've covered everything on Brexit. If anyone's got any comments to, you know, chip in, we'll be posting it on the new group, and you know, just absolutely chip in. Just want to do a sense check on our, you know, I'm short risk rallies. I know you're a bit short as well.
Yeah.
Just my own experience with fading. I used to trade data in futures, and the algos were lightning quick down to the nanosecond in some cases. So what we did was we faded any strength or weakness if the time was right. And I learned how to fade, and I still make a lot of mistakes, by the way. But one of the things I did learn the hard way was patience. And when you do get a risk on squeeze, I know from personal experience, you don't lump in, even if it's gone a long way. You just start small and add to your position. And my preference is starting a third of your clip, adding another third, and then, you know, later on adding a final third. So patience is key. You've got the whole week. You know, this squeeze could carry on till Tuesday. It may go longer. You know, just define your risk, accept it, and have a point where you go, you know what, I'm wrong. Don't be a hero. That's just my experience. I've been a hero too many times, and I got killed far too many times, and it wasn't pretty. So I wouldn't want that on anyone. So I don't know what your thoughts are on that thing.
To be honest, it's like you said, you know, and I said this a few times in the past. The one thing that I changed in the last many years in terms of approach of trading is exactly that. It's going to be in a sort of 3 steps or 4 steps. You know, what has changed in the last few years is just the algo side of things, or the electronic just leads to one-way markets or squeezes extending a bit further than you would expect, sometimes challenging even the charts before it then fails. And for me, to be honest, I always try to, into the first sort of areas that I love, I just put on 25%. So I know, okay, I have it. I feel a little bit more relaxed. When I don't have risk, I don't really feel very relaxed. And then you plan from then on. And like I did on Friday, I had a few sell levels in Aussie, and I just took them away because you just saw that there's a push coming, and then started to sell later on. Because I already short 100% Aussie now, I gone slower in Euro yen, Aussie yen, and Canada yen. So I only done 25% there. And just want to see whether this sort of, you know, what happened on Friday. We had, you know, yet another perfect storm, just a bit more manageable one. We had the RRR cut from China that didn't actually much at the time. Then we had non-farm payrolls, and at the end we had Powell that the market perceived to be dovish, and we come to that in a moment. So we had like 3 reasons for risk to rally. You can add a 4th one, which is the US-China talks that should be held next week. I don't really think much is going to come from it, but the market has another reason to be bullish. So I will be very careful with selling the next clips. So I will identify the levels very carefully. Why? We shouldn't forget that we had quite a bit of pressure on dollar yen and cross yen between Christmas and New Year, or second half of December. And you could argue that already in the second half of December, the market was probably a bit thinner than usual. So maybe that move has as well, maybe not overdone, but probably went a bit quicker, a bit further than it would do normally. So that is what I have in my mind. What I would say as well, you have to ignore the flash crash lows. They have not happened. So that means don't think, oh, dollar yen is 150. Oh, that's 450 pips off the lows. No, forget it. Look at the levels where the flash crash started. Those are your reference points, not the lows. The flash, those lows just haven't really happened. You can't look at them. So look at the levels before the flash crash started. That is your reference point, and against that I would judge any rally based on news, whatever you feel. So I think this, what is it? The 77.25 in Aussie yen is just the sort of first bigger FIBO. That's why I sold some there. But I think we need room. I think you're right. We don't know. The market could be bullish for another 1, 2, or 3 days. Suddenly this newfound optimism. I think you definitely got to sell some risk. If you're not short any, you got to sell some, whether it's in Aussie yen or in Euro yen or in whatever else. Because every single time you had these sort of bounces in equities, they've gone away rather quickly.
Yes.
Right? And every time it's suddenly, I know it's hard, and said that to a friend on Friday. I know if you, a macro guy that has a view and you fade into a position, yes, you have to sell into a big market. That's always a little bit uncomfortable, I understand. But, let's be happy that we have the rally. I was more worried last week that I have to sell low ones because I took the dollar yen back. I wasn't short any risk anymore. So I got a bit nervous. What do I do if risk continue to sell off? And I saw myself already being forced to sell low ones, which I hate to do because I don't like chasing, especially not in the yen product. So I'm actually very happy we rallied, but I'm not going to get complacent and say, oh, now we are up here, I go like limit short risk. That would be the wrong conclusion. We still have to do serious work. We're bearish for all the reasons we know about or talked about. There is a chance in the next day or 2 or 3 that these risk rallies can extend based on what we just said. Non-farm payroll should be done and dusted by Tuesday. I don't think we're going to lose any sleep over non-farm payrolls. I think the FOMC, Powell is forgotten by Wednesday. That's the only sweet thing about this market these days. They forget very quickly. Right?
Yeah.
So I think by mid of next week, all the stories we talked about on Friday are going to be forgotten. Right?
Yeah.
One thing I will still do, and I will put it on our new chat when I can, is look into the history of December non-farm payrolls. Like we spoke offline, I just have a gut feel that December always sees a little bit of an upside surprise because of the holiday season. And I just want to see if that's actually true. So I still don't fully believe, to be honest, if you get a second non-farm payroll above 300, I might have to eat humble pie. But I think it's just, I wouldn't be surprised this to be a seasonal event. And I don't think we should overreact at this point in time. And last thing I want to say is, like we discussed a few times, we used to be very focused on average earnings. I still keep an eye on it, but I'm not overrating it anymore. I think Powell just keeps us telling us since 2 months or 3, he tells us watch data. Our policy is data dependent. And sooner the market starts to believe that, if the market actually thinks on Friday that the Fed has introduced a Fed put, then they're just horribly wrong. He did not do that, and he did not falter under the pressure from Trump. No, this is pragmatic Powell. This is how we got to know him, right? He's looking at the data slowing down, somewhat. And the Fed is not stupid. Every country in Europe has downgraded its growth for 2018 and 2019 in the last 4 or 5 weeks. So he's not stupid. If global growth is indeed slowing, sooner or later, it's going to come to the US as well. We're still going to have in Q1 and Q2 the effect from the actually past rate hikes. We have the tax cuts falling out. We still have obviously QT. So I think it doesn't mean the cycle is over, the hiking cycle, but I think as pragmatic as Powell is, he's just going to go like, you know what, we hiked in December, we had to, must announce like this. I think the next March is going to be a pause. I really do. I think unless data would just, like you would say, the surprise index, but I think data has to clearly accelerate like quite a bit for my view to change around the Fed, that the Fed might actually only hike once or more, or possibly not at all in 2019, but early doors.
Yeah, I mean, one tweet from Trump to Saudi will get oil lifted off $40, and then it's game on for CPI, I think. But with the current price, we've still got a long way for oil to be priced into CPI, from the headline anyway. Cause a bit more sticky, around 2%. But yeah, I agree. I was just looking, as you were talking there, Beat, I was just looking at some levels here. That kind of from 109.50, where it smashed down there, just kind of ignore that 108.15. Some people say, it's found buyers on the daily, right? Some people say that's still a level, it smashed through it. Well, you have to ask yourself what happened, and as you know, it was a flash crash. So yes, it still stands for me. It is a little bit of a level for me, but I like 109.50. I really like this level. It was a kind of a bit of a chop fest up here. It was around 111, but the big one's 112.20, which is up here. That's a beauty. I'm going to be way stocked out before we get up there, though.
Me probably too.
That's
to be honest,
big boys.
The only thing I haven't resold yet, as I've flirted with the idea to see like 109 figure 50.
Yeah.
So on an early 109 handle, I will sell 25%, and then see whether we go towards 110. Just have to go slow a little bit, right? I mean, the last thing I want to be is come mid-January, I'm already nuked and down money. So we have to respect that we could, even though we've been calling it quite well in the last 4 to 6 weeks. I think patience is the key in the next few days here.
The other thing I want to sort of touch on is this whole, I said in my make sense of macro thing, don't mention Powell and put it in the same sentence. I'm gonna go on the naughty step. Well, I'm gonna be on the naughty step because I'm gonna mention in the same sentence now. Okay, this is my thing about the Powell put, right? There is no one, obviously, but if the market thinks there is, it doesn't matter, does it?
Yeah, exactly.
Because there is one, even though there isn't.
Yeah.
That's the crazy thing about markets.
Yeah, and that's exactly why I say we can't be complacent.
Yeah.
I think we called it well that there isn't one, and I think the market only actually just understood that after the December hike. That's, I think, to me, the first time when I felt the equity market started to go like, like the disbelief that there is actually no Fed put, the first time in a long time. And whether they thought that Friday was the reintroduction of the Fed put, as you say, if the market believes it is, we can say it isn't for a long time, and it's still going to bounce. So we can only judge it on the next leg down in stocks if the Fed is just quiet, right? So we have no near-term ability to test that out, unless stocks would just start to come off hard again. But no, it's just, that view. I don't think what has to happen for my views to actually change. They're actually scarily very entrenched and rock solid, and probably have to really be stopped left, right, and center before I actually give up those views. To be honest, they both said it on the 113 handle, talked about selling dollar yen and yen crosses, and so we got a good leg down, but now comes the moment where we can't be complacent. So I would just have small risk, short risk, and try just to pinpoint the levels where you're comfortable selling risk.
The only thing that I guess could really upset our view is if he tapers QT, and it wouldn't be called a Fed power put as such blatant, but it could really lift risk if that we've had some chunky roll-offs on those expiries this year, last year, sorry, and I need to look at the Wolf's. There's a guy called the Wolf. I don't know if you know his website, but he's on the QT tip. I can look it up myself, but he's got a good tone, and we've got back quite a lot. Like 2008 was very, very a lot of bonds expired, and so I just think if he got a message on saying that he's going to kind of pause that or reverse it still, that would be carnage. It won't be carnage, it'd be carnage for risk bears.
Yeah.
Just something to bear in mind. Well, it's been a brilliant session, and it's going to be a really good week. I'm looking forward to posting some views on your new group, and I'll post this pre-Asia. It's now 9 o'clock London time. But before I go, I'd like to mention some commentary that Beat does. It's a service he has. It's brilliant. It's I've seen it. I use it. I love it. It's actually amazing. So Beat, can you tell us a bit more about that?
Yeah, sure. What I do is that just every morning I quickly send out the majors in the 4-hourly daily chart. So it's something for day traders and for macro traders. I put sort of my spin to it, my themes, what I'm watching, some trading IDs, and during the day I just update on news what I consider to be important, and just get this sort of all-round macro going from the sort of, let's say, breaking macro down into tradable trades from a risk taker. And who wants to hear more about it, contact Patrick or myself, and we can chat more about it offline.
That's fantastic. Well, thanks for joining us, and Beat,
thanks for having me, Patrick.
Absolutely fantastic. We covered pretty much everything. We're both avid LinkedIn bloggers, and let's just have a brilliant week, a safe week, and watch that risk.
Perfect.
Thank you very much.
Thank you, Patrick. See you.